If that's the case, then we'll probably reach the top by the end of this year. So it's variable in the sense that we don't know how long these consolidations take, but when we do break out of them, the moves up are very aggressive, and based on the idea that they get more aggressive as we rise, we should expect, a very aggressive final rise. And again, depending on the time, that could end up the end of December of this year, or that maybe that ends up early Q1. Either way, though, it's going to be fun to watch and fun to experience.
This content is brought to you by Gemini, which is one of the top exchanges in the crypto market. I am a user of this platform, and they make it easy for you to buy, sell, and trade crypto. They offer a variety of great crypto products and services, such as a fully functional exchange and app. They offer staking, they have a great credit card, and they have a USD-backed stablecoin called Gemini Dollar. They also offer a derivatives platform where you can easily do all types of crypto trading with perpetual contracts and much more. If you sign up and you trade $100 in Bitcoin, you can get $10 in Bitcoin in return using the code WELCOME10. So if you'd like to learn more about Gemini, visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and with me is Credible Crypto, who's one of the best traders and analysts out there in the market. I've had Credible on in the past. Cred, great to have you back on, man.
Thanks for having me, Tony.
Cred, obviously, I'm a big fan of your work. I've followed you for many years, looking at your chart analysis and so forth. That has helped me to learn about the market. And I figured it would be a good time to have you on because we're at the cusp of what is Bitcoin going to do next? Now that the Fed has cut rates, money printing is going to be back soon. And I wanted to get your thoughts. What is your outlook on the cycle timings? Are we on track, or are we behind, or are we ahead?
Yeah, so I think that we are relatively on track, I would say. And I say that because the last 5 or 6 months, we've been going pretty much sideways on Bitcoin. It's been a long consolidation. I wasn't expecting it to take this long at these highs. We tapped our prior all-time highs like 5 or 6 months ago, right? And so typically, what we've seen in the past, and of course we know the past doesn't guarantee, the future, but what we've seen in the past is that typically once Bitcoin breaks those prior all-time highs, it's a very aggressive and rapid expansion to the upside. So in my eyes, I was thinking maybe a couple of months of consolidation here, and then we continue up to much, much higher. But now it's been 5 to 6 months. So we've been consolidating for a while, longer than I would have expected. But I think the key that people have to keep in mind is that there's so many factors at play in these markets. Time is always flexible. What's not as flexible is price. So the fact that we've been consolidating for 5 to 6 months doesn't concern me in one bit, because it just means that we're taking longer for larger players to establish positions. We're shaking out all the weak hands. Supply is getting constricted even more. And there's a famous saying in the space that we have: the longer the base, the higher in space, or the longer the consolidation, the greater expansion. It's all telling us the same thing. And typically, what that simply means is that the more time that we have to consolidate Bitcoin into the hands of stronger holders, the more aggressive the next rise is, because stronger holders aren't as tempted to sell at the first 10-20% gain. And so in a way, it's both depending on how you look at it, a blessing and a curse. It's taking longer for us to get that parabolic advance, but it just means that it's probably going to be that much more aggressive and that much more strong once we do finally break out.
Yeah, great points. And I'm in agreement with you. Like, I felt we ran up so fast earlier in this year with all the ETF buying and so forth. It kind of put us ahead of schedule, and people were thinking left translated cycle. But then Bitcoin is like, we're going to normalize and go back to the normal pace, right? That's kind of like what's happening. And we have to be patient because if you look back in 2016, 2020, the halving years, we're on track.
Yeah, so I think I don't I know left translated and right translated are terminology that are used for, I believe it's, and I've not studied in this, I'm not well versed in it, but I think it's called like Hirsch cycle theory or something like that. It's more of a traditional cycle theory that, again, I'm not super well versed in. Of course, I use a different methodology, and for a while, my ideas and my theses tend to line up with this idea of a left translated cycle. But long story short, kind of the way that I've been viewing this is that if we were to adhere strictly to the 4-year cycle that you've seen quite often on Twitter, a few things would have needed to have happened. And as you mentioned, we seem to have sped up. But the first thing was a run up post halving into new highs. And of course, as you mentioned, we got that run up prior to the halving. So that's
Mhm.
the first thing that tells us that something might be a little bit different here. The second thing is that if we take a measurement, I've seen this a lot, or I used to see it a lot on Twitter up until we broke the highs quicker, but you used to see people comparing the last run up or the last cycle up to the highs at 69K compared to the current run up and taking a measurement of the amount of days that elapsed. And without getting too complicated, if we were to follow the same time cycle as we have in the past, not only should we not make a massive run up in the coming months, but this bull market should extend into late 2025, early 2026, if we're to follow that same
Mhm.
4 year idea. So, in my eyes, we're taking longer here at the highs. And I still think, and I very strongly believe that the run up that happens after we break out will finish, will wrap up in 3 to 4 months. If we push into 2025, Q1 2025. And again, if you're following the 4 year to the T, most should expect us to complete the bull market late 2025, early 2026. So, as I previously said in one of my YouTube videos, what I anticipate happening is a massive run up into these next few months, maybe pushing into Q1 of 2025, and then a correction begins, right? And because most are expecting the bull to continue on to late 2025 or early 2026, I expect that people will be buying this dip thinking we still have a year and a half left in this 4 year cycle.
Wow.
And my opinion is that this is going to catch a lot of people off guard. I don't know if 2025 Q1 is still considered left translated. That's where I'm not quite sure about the
I think it's been
terminology.
invalidated from what I've seen some people said.
Okay, so if left translated specifically means before the end of the year,
Yeah.
then I'm not sure about that. I know that there's also right translated, and I know that there must be something that's not left or right translated.
Yeah.
But I think again, like I said, the majority, if they're looking at this 4 year cycle in kind of repeating what we've seen in the past, are looking at late 2025, early 2026, and I don't think that's going to be the case. So I don't know what type of cycle that is considered, but in my terminology, again, we're wrapping up, I think, a final fifth wave of a much larger cycle that started a decade ago. And I think that this is going to end sooner than most are expecting and still catch a lot of people off guard.
Can you share your Bitcoin chart with us and maybe we can walk through some of that, right? Like where are we from the wave count? Are we finishing wave four and is wave five starting now or it hasn't started yet?
Sure. So let's go ahead and take a look at the charts here. Normally, I have these charts like fully marked up, but just for the sake of watching how I analyze these things, I have erased the charts completely. So here we are on the chart, and this is Bitcoin. I'm going to zoom out a little bit here, and again, completely clean chart, just so you guys can see how I approach these things.
Mm.
And I'm going to zoom out a little bit more. We're going to go on the very high time frame. We'll put this in log scale to view this a little bit easier. And so the kind of the key takeaway here, just from a very high level perspective, is that again, as I mentioned, we're looking for 5 waves, and we can see here quite clean and obvious sections of expansion and consolidation, right? And again, you can now see very clearly here this 5 wave subdivision that we talk about. And I'd also like to point out that the current consolidation, while it has been very long, some people think it's been too long or it's getting way out of hand. But the reality is, if we just compare this correction to the correction we had down at 30K before we went 2x in like a couple of months, it's about the same length, right? So we
Mm.
can see here that in terms of time, while this correction has drawn out quite a bit, it's nothing unreasonable or it's nothing that should be concerning people, because we saw the same consolidation at 30K before we ran to 71K, in a number of months. And so I've repeatedly said that people need to keep this big picture in mind, because a lot of people are getting freaked out by this long consolidation and thinking that for some reason we're in a bear market despite us being
Yeah.
essentially at prior all-time highs. And sideways is not inherently bearish. Sideways just means neutral consolidation. And typically, if we're in a trending market, whatever trend preceded the sideways is what we get after. And so as you can see, at 30K, we were going sideways after a move from 15 to 30K. That then was followed by a move from 30K to 70K. At 70K, we're going sideways, following a move from 30K to 70K. What follows should be expansion to the upside to 100K plus. It was very simple on a high level. It's very easy to see this, but a lot of people get caught up in the lower time frame stuff and then get confused or they get shaken out. And so we're looking for this final fifth wave, which is going to be essentially a parabolic blow off top, in my opinion. And the idea is that the fifth wave, because we expect it to be a blow off top, a parabolic advance, the rate of ascension, or the rate that in which we go up, should be even more aggressive than anything we've seen yet. So
Mm.
just for more context, if you take this third wave and you look at this last stretch that we had, we went from, if you take like the point that we broke out from, we went from 42K up to 70K, about a $30,000 move. And that took from 5th of February to the 4th of March. In 1 month, we moved up $30,000. That's an average rate of $1,000 a day.
Mm.
And I'm saying that this fifth wave should be more aggressive, right? So when you take that into consideration and you think, okay, we're currently here in September, we have October, November, December, before 2025 even hits, that's 90 days. I don't know if we'll break out next week. I don't know if we'll break out at the start of October. I don't know if we'll break out mid-October. But
Mm.
what I do know is that when we do break out, that move up should be at a greater rate of ascension than this move here, which tells me that if we're targeting a top for this cycle at 150K, that's about $90,000 higher than we are today. If we were to break out next week, then we should be at 150K by the end of the year. And so if that is going to be
Wow.
our top for this cycle, then we very well could still top in 2024. And that's kind of why I say, like, people are like, have you pushed your timeline back? Are we going for 2025? I'm like, hey, we could. But if we break out tomorrow, then no, we'll finish by the end of this year. So it's like, I won't know until we break out, right? This consolidation could go on for a number of weeks longer. We could break out tomorrow or the day after, like some people think. If that's the case, then we'll probably reach the top by the end of this year. So it's variable in the sense that we don't know how long these consolidations take. But when we do break out of them, the moves up are very aggressive. And based on the idea that they get more aggressive as we rise, we should expect, a very aggressive final rise. And again, depending on the time, that could end up the end of December of this year, or that maybe that ends up early Q1. Either way, though, it's going to be fun to watch and fun to experience, because we're not going to, like, I haven't seen something like this since 2017, and that was a long time ago. So it's going to be fun to watch when we finally break out of this consolidation.
Yeah, well, I'm hoping that it all happens this year. We get profits sooner than later. But to your point, we have to be patient and we have to watch the charts, because no one has a crystal ball. And we gotta be patient here. And I think you brought up some great points showing what took place last year in 2023, that huge consolidation. But then look how fast Bitcoin ran up in the months after.
Absolutely.
Now, how are you calculating your cycle top prices, right? Are you using Fibonacci? How do you go about figuring that out?
Right. So it's actually very, very simple. I'm going to go to the chart that has all the historical price history, because this one doesn't.
Mm.
And it's actually a very, very simple method that I use to calculate the potential top. And as more price action develops, we can obviously get narrow in on the top. But until we start this final fifth wave, it's going to be a little bit tricky to identify. But I have a very broad range, and then again, we can narrow it down. But the way that I got the broader range is basically, if you look at Bitcoin historically, and you look at essentially all these parabolic or blow off tops that we had that marked our major cycle tops, you can see basically that, as is expected, that the ROI from trough to peak on each of these kind of decreases. And of course, that is to be expected, right? We know that over time, as an asset matures and more players enter the space, you get lesser ROI on the asset. And that's just to be expected. But you can see here, if I mark all these off, that each of these has a subsequently lower amount of ROI, right? Our last cycle that ended in 2017, we had a 12,000% gain. The one before that, 62,000%. The one before that, 356,000%. So I've simply said that I expect this cycle, which again, as I've said, many times, I still think this is the same cycle from 2018. I expect that this cycle should simply be less than 12,000%, right? So we take 12,000% or 10,000% even, that puts us at 287,000. 12,000% puts us at around 360,000. But point is, it should be less than I would say 10,000% in terms of upside. So I've said no higher than 300K. Okay. And I've said that since literally since 2019. So it's been a while that I've said no higher than 300K. And it's just based off of this math here. Now, if we take that idea and we zoom in and we say, okay, well, again, we're looking for 5 waves, right? We have a larger 5 wave move here. We're wrapping up the final 5th wave, currently trading at 62K. We already have 2 of the 3 waves here. We expect the 5th wave to be the strongest. But if you look at the 3rd wave here from 25 to 75, that's a $50,000 move. The 5th wave should be bigger than that, right? So now we have a minimum. We have a minimum of $110,000, okay? So at the bare minimum, I would say 110K. I'm going to mark that off here. Okay, that's like that's the bare minimum. Okay, then we have a maximum. As I've said, this should not exceed the prior run. So now we have a maximum of around 300K. That puts us somewhere in this range for a cycle top. Okay, now as this 5th wave develops, in the same way that we have clear subdivisions or clear like breaks between impulses and corrections on each of these smaller waves, we should have that on the 5th wave as well. So now what we're looking for, you can look on the lower time frames as price action develops, you're looking for an impulse, a correction, an impulse, a correction, and then you're looking for the final impulse. So if we start moving up and we complete the first wave at 85K, we then come down for a little correction, then make the next wave up to 160K, come down for a little correction, then we can estimate with greater accuracy the top of this 5th wave. And again, it's somewhere, in my opinion, between 100 and 300, but as price action develops, we can kind of narrow that down. I've previously said ballpark, I would say like 150K, but then again, depending on momentum, we could go 160, 170, 180, 190. Even 200 is fair game. As long as it's under 300, I'm fine with it. Above 110, I'm fine with it. Somewhere in here, we'll have to kind of pay attention as price action develops, look at our indicators and developing PA to kind of better narrow it down when the time comes.
Fred, why, and I'm very curious about this, why do you not see 2021 being similar to 2017 as far as movements? Because we had a bull market there, and then we went into a bear market. But and I'm a noob at this, right? So I'm curious, like, oh, how come that is invalidated, so to speak, or it's not like 2013 and 2017?
Yeah, so fantastic question. And I'll just make 2 major points to argue that I've made a lot in the past, and you can find more details on my Twitter. But just for your viewers, kind of 2 main points that I want people to consider when they think about this. As I previously mentioned, the ROI on each of these parabolic advances decreases, right? We can very plainly see that here. What's the other thing that you notice that decreases here with, or I should say increases here with each cycle? The amount of time between the bottom and the blow off top increases, as we can see, right? Each of these takes longer and longer to find the top. And again, that's expected. As volatility decreases, things tend to take longer. They tend to be less volatile, not go as high. Understandable, right? So if we take a look at the amount of time that elapsed in this last cycle, this move from 164 Bitcoin up to 20,000 Bitcoin, if I go ahead here and we just take a look at how much time elapsed, we have 1,050 days. Okay. So now my base expectation for this next cycle is it should take longer than 1,050 days from the trough to the peak. If I go ahead and I clone this and I just print this right here, what do you see? You see that the top that people believe was the cycle top was exactly the same in terms of time. That breaks the pattern that we've seen here of taking longer and longer, right? So that's the first issue here, is that when we are here at the top at 69K, the amount of time was exactly the same as a prior run. That's not to be expected. We should expect this run to take longer. And so this was the first issue, the first red flag. And people keep saying, well, we keep repeating, we keep repeating. If we were repeating, then this cycle should have taken longer. It shouldn't have been the same. Look at every prior blow off top from the bottom to the top. Every single one has taken longer. And again, that's just to be expected normal. That's not anything out of the ordinary. If we topped here in 2021 for this cycle, it would have been the first time that we've taken exactly the same amount of time from trough to peak as the prior cycle. It's never happened in the history of Bitcoin. Now, the second issue with this is, again, we look at every prior top of every cycle. What do we see here? Blow off top. This high was never revisited. We saw a massive crash, 80 to 90%. Blow off top. This high was never revisited, 80 to 90%. And 4 to 5 years or 3 years or something like that till we recovered those prior all-time highs. Blow off top. This top was never revisited, 3 to 4 years before we recovered. This top was subsequently met with incrementally higher high, and then we came down. And I've said how this is not a true blow off top. This is more akin to a range being formed here. And blow off tops, by their very definition, we should not be able to go back up to the highs like we did here. This tells me that this was not a blow off top. This was actually just some ranging price action or a intra-cycle correction, essentially, before the final blow off top, which I believe we're going to see now, this final parabolic advance. And then finally, I'll add a third reason here. You'll notice that I look at the wave structures. We're looking for impulsive versus corrective moves, or trending versus corrective moves. And we look at a trending move as a move that has a clear 5-wave distinction. And I can go down on lower time frames and actually map out the 5 waves on each of these impulses, but I'll spare you that time. And I'll just point out to what we have here. What people claim is the 5th wave, right? So people are then claiming that, well, we had 5 waves. We had 1, 2, 3, 4, 5. And you can just look at this image here and see how off this looks, because the 5th wave should be a lot bigger than the 3rd. It shouldn't be a fraction of the size. The 5th wave also has just three subwaves, which is considered what we call a corrective wave. It's not actually a trending move. This isn't a trending move, and every impulse should be a trending move. Rather, this is just a choppy corrective move where we took the highs in a ranging structure and then came back down. This is all one giant correction. As we now know, I consider this a large corrective wave, similar to this one here, right? So this was a major corrective wave. This was another major corrective wave. This is the true impulse. And now when we factor in this move as part of this larger cycle, now all of a sudden we get a cycle that is rightfully so taking longer than the prior cycle, right? We get a cycle that now has 1, 2, 3, 4, 5 waves to the upside. So it fits all the criteria that we look for. Whereas if we assume that this was our cycle top in 2021, you have all these issues with timing, at least in the way that I perceive the markets. Obviously, people have different opinions and will view this differently, but this is how I view the markets.
Now, in addition to the charts, are you looking at catalysts such as the DXY breaking down? A catalyst, for example, would be the ETFs with institutionals buying up a ton, right? BlackRock has over 20 billion in their ETF for Bitcoin. Are you looking at those factors which may help you get an idea of the price impulse that we may see, or how high we may go?
Tony, that is a great question. And I understand the interest in these things, because in traditional markets, they do have quite a role to play. The reason that I don't put so much focus and attention on them at this stage is because I try and remind people that, in terms of context, the size of this market, the crypto market right now, I'm not sure exactly what it is, but somewhere around 1 to 2 trillion, if I'm not mistaken. Global equities are 140, if I'm not mistaken, $1 trillion market cap. Right. So global markets, or even US equities, I believe are, in the either 50 to 100 trillion, just US equities alone. And then global, you take global and you're at 100 to 140 trillion. I can't remember when the last time I looked up the data was, but the point being that crypto as a space is maybe 1%, maybe 2% at a max of global financial markets, or even US equities. It's so small right now that these traditional market indicators that people are using to apply to crypto may not be as relevant as people think, because the market is so small at this stage that even if we're, for example, even if we're in a recession, or even if the traditional markets are falling, even with all these things happening, it would take a fraction of a percent of money to flow from traditional equities into Bitcoin to pump this thing up like mad, because of how small the market cap is, right?
Yeah.
So when you take that into consideration, you consider how constricted Bitcoin supply is at this time, which we can look at on-chain data to see, it really doesn't matter so much what's happening in the traditional finance world, in my opinion, because this market is still so small. Give it 5 to 10 years, let this market grow, and I think at that point, these things will matter more. But at this stage of the game, when this market is so small relative to traditional markets, not much is going to stop this massive move that's coming. It's almost inevitable. I don't like to say anything is inevitable in markets, but it almost is, because of how small this market is and how tight supply is currently constricted.
Sure. Yeah. Great points. Definitely. I know when you put that into context, right? You said how big the equities market is globally, and people sometimes think of this as like US based market, but it's a global asset class and it's
Exactly.
a finite supply. Yeah.
Mhm. Exactly.
Could we take a look at the Bitcoin dominance in relation to what it's doing now and when we could potentially see the altcoins move? And we're seeing some altcoins are starting to break out, of course.
Yeah, sure. So Bitcoin dominance, one of my favorite charts because it is just it's a beautiful chart. In bull markets, Bitcoin dominance tends to rise as Bitcoin leads. Of course, out of I should say out of bear markets and into bull markets, Bitcoin dominance rises. Why? Because Bitcoin is typically the first to recover after a bear market or a massive correction, as we've seen. So back here at 39% Bitcoin dominance, you can go back on my Twitter, and I was calling for a massive move to 60% plus. Why? Because I anticipated, this next massive impulse starting on Bitcoin, which
Hmm.
we're now very much so in. And as you can see, dominance has been rising. This I think will continue a bit longer. Of course, we're expecting a parabolic sort of blow off top here in the coming months. And so Bitcoin dominance, I expect to continue to rise a bit longer. Previously, I said like a minimum of 55%, which we've now hit. And I said we'll probably end up somewhere in the 60% range. It's hard to know how high we're going to go here until we correct. But what I will say is that when we do correct, whether that be at 60%, 65%, maybe even 70 plus percent, when we do correct, altcoins will catch up very, very aggressively. They'll tend to follow Bitcoin. Once Bitcoin tops, money flows out of Bitcoin into alts. And at that point, we're looking for a massive drop in dominance all the way back down to sub 35%. So this is going to be, in my opinion, kind of the big alt season that everyone's been waiting for. Just like what we saw here in 2017, I think Bitcoin topped December of 2017, if I'm not mistaken. You can see we had this rise in dominance as we had the blow off top. And then in December, when Bitcoin topped, we then saw dominance tank as alts played catch up. So the same thing, you can expect Bitcoin dominance to rise through the blow off top. I mean, we may get some dips on the way, right? Like we could before the blow off top begins or gets well underway, maybe we dip a bit. But when we get that blow off top, as Bitcoin goes parabolic, expect dominance to spike up one more time. And then we see this massive bleed as money flows out of Bitcoin, which is now topped, into the rest of the market. And because alts are so small and their market caps are so minuscule, that amount of money that flows out of Bitcoin into alts, it kind of amplifies, it's amplified because the market caps rise increasingly fast. So you get this massive drop in dominance. And which is why I've said, I don't think that the alt party will be over until we see sub 35% dominance. So that's a good level to look at if you're in alts as Bitcoin starts correcting and alts start popping off. A good level to look at is this 35% level. Until we're below that, I think it makes sense to milk the market for everything that you can.
That's a great point. Because that was going to be my next question of, at what percentage will we start to see all alts really move? And you mentioned 35% or sub 35%. So that's a good marker to keep in mind as we move forward.
Yeah, so to be clear, by the time we get to sub 35%, a lot of the big moves will have already occurred. So they'll start occurring, as Bitcoin tops off here. And
Okay.
then as they're occurring, we're going to be bleeding down. And at this point, it's going to be a full-blown alt season. Everyone's going to be going crazy like they did in 2017. By the time we get to sub 35%, that's when you might start thinking, okay, now the party may be ending soon. And of course, you'll look at this in conjunction with all the TA on the alts and everything. But by the time we get here to sub 35%, that's when you got to start being a little bit more cautious.
Hmm. And then to your point of the dips in the Bitcoin dominance, you highlight there a bit of a dip before maybe we go higher. Is that correlated with Bitcoin hitting an overbought scenario where it cools down, liquidity starts to flow to alts, some of these alts pump, but then it flows back to Bitcoin. Bitcoin makes another move up, the dominance goes up. Is it that type of correlation, you think?
Yeah, so you have the right idea. And going back to the Bitcoin chart, essentially what that means is in the same way that we had like five waves here and we have, two major corrections within this five-wave move, that's kind of what we'd expect here on the fifth wave. Granted, the corrections won't be nearly as long and they'll be a little bit more they'll be a little bit like less lengthy. It'll be something like this probably.
Hmm.
But these little corrections here that occur when Bitcoin's basically going sideways for the little amount of time that it will,
Sure.
this is when we expect some liquidity to flow to alts, right? So Bitcoin breaks out, has some massive move, drains a bunch of liquidity, maybe goes sideways for a week or two. In that small window when it goes sideways during these smaller corrections on the way up, that is when sometimes we see money flow into alts. Because at this point, people are like, all right, Bitcoin is broken out of this 6 months consolidation now. It's not going to break down. Now we're breaking out. Now we're going higher. Well, now we're going to 100K. Now we're going to 150K. Now we're going to 200K. Well, if we're going to 150K, 200K, well, then alts are going to follow. So let me jump into alts. So as soon as Bitcoin starts to pause here, we may see a little bit of money start to rotate into these alts now that people are no longer concerned about a big breakdown or a new bear market. Now that people are pretty much convinced that we're headed higher, that's when they get more comfortable, moving some funds into alts, thinking, hey, Bitcoin has run. Maybe I missed Bitcoin, but I can play the alts, as a catch-up trade. So then we start seeing, these little windows of kind of alt outperformance, but the real fun begins over here when Bitcoin tops. And then Bitcoin starts chopping here, and then you see alts going absolutely crazy before the big nuke, right? And so we saw, I won't pull it up, but I've looked in the past at the data, and we actually saw that after Bitcoin topped here in 2017 at 20K, in the following, I believe it was about 2 to 3 weeks or about a month that we were chopping between 15 to 20K. The altcoin market cap, I believe altcoin or the top 100 altcoins, one of the two, tripled in the time that Bitcoin ranged between 15 to 20K. So this is where the magic happens. Altcoin market cap tripled because money was flowing out of Bitcoin. People were taking profits. And where were they going to put the profits? Into the altcoins that haven't yet run up, right? And so you see massive pumps after Bitcoin tops, the biggest alt season after Bitcoin tops, before what ends up being, an eventual massive correction to the downside.
Mm. Great insights, man. Now speaking of altcoins, can we take a look at the charts, Ethereum, Solana, and XRP respectively, and if you can give us, what you're seeing on those charts and the blow off top price.
Sure. So let's take a look at, we'll start with Ethereum, we'll then go into Solana and then XRP.
Mhm.
So Ethereum is a interesting one. And obviously, at the bare minimum in terms of upside, we're looking at new highs. A lot of people wondering if the correction to the downside is complete yet. And as I've been sharing on my Twitter for some time now, I think we're almost there. I don't think we're quite there yet. As I've said with Bitcoin, I am expecting one more lower low here on Ethereum. And basically what we're looking for is, this is now the 3 month chart. So you have this consolidation here that we can mark off, a 3 month consolidation before we went from 1,500 to 4,000. So a 3 month consolidation before a 6 month up only move. This area was what you can consider kind of the most significant support on this entire chart. That matters for now, at least, right? With Bitcoin being bullish and we're expecting Bitcoin to break out, you would look for limited downside on other coins like Ethereum. And so you can say that downside is essentially capped in this green zone, which ranges from $1,500 to $2,000. Okay. Above this, you also have a key swing low right here. You have another marginal higher low, right? So oftentimes when you get what we can call these equal lows, but I'll go down to the lower timeframes and you can see that on the last drop, we failed to take this low here. And where does it sit? Right above what we believe to be the most significant area of support on this entire chart. So what I'm looking for now is, again, is just one more marginal lower low here, like this. And then I think that Ethereum probably reverses to the upside to make new all-time highs. So I think downside from here is relatively limited. Of course, this type of move only happens if Bitcoin corrects as well. I've explained why I think Bitcoin will correct soon, but one more marginal lower low into the most significant area of demand. This is the most epic buy zone you're going to get in a long time, in my opinion, because after this, we're going to new all-time highs, in my opinion. That's going to be a minimum 2 to 3x, as you can see. But realistically, once you break all-time highs, we expect to go significantly higher. I've previously said that if we expect Bitcoin to, let's say it's at 60K right now, we were thinking 150K, that's 2.5x, or you could say 2 to 3x. If we think Bitcoin's going to 2 to 3x, most alts will do multiples of that. And Ethereum is no different. So if we think that Bitcoin can 2 to 3x from current levels, I think that Ethereum at the minimum will 2 to 3x from current levels. That puts us at 5 to 7,000 at a minimum. realistically, we expected to do more than Bitcoin in terms of ROI,
Right.
as most alts will. And so I'm thinking 10K minimum is reasonable. Above that, totally dependent on how much momentum builds and how high we go up and how aggressive things get. But I would say a 10K minimum for Ethereum, just based on the ideas that I just shared. And realistically, I wouldn't rule out up to 20K on Ethereum.
Mm. Um, I know it's pretty funny. You probably noticed this. When you're looking at charts, right, and you understand the dynamic between Bitcoin and altcoins, then you know that alts are going to bleed against Bitcoin at some certain period of time, right? But then eventually, as Bitcoin tops out, the liquidity flows onto these alts and they start to move and outperform Bitcoin. But it's funny how the narratives, you have the ETH camp and the Bitcoin camp, like, look, ETH is dying against Bitcoin, and it's like it's just cycles, man.
Yeah, exactly. It's funny because I mean, I've been here for now for 7 years and I've seen it all, but distinctly remember when Ethereum had became like deflationary because they changed whatever the protocol, and
Mhm.
the inflation was now being burnt by fees or whatever it was, and that was supposed to be some massive catalyst. Everyone was like, "Well, if Ethereum's deflationary now, it's going to go to the moon," and then obviously it didn't do much, and then the ETFs are approaching, and well, Ethereum ETF is coming, it's going to go to the moon. And look where we are now, right? So like these narratives, these ideas that these things are dictating price, are often just ways to distract you from the big picture. And
Yeah.
I've shared, of course, on Twitter, but Ethereum, Bitcoin, back when we were here at 0.085, I basically said I'm looking for a move down to this box here. This was over 2 years ago, right? I said I'm looking for a move down to this box over here, and more precisely this region right here at around 0.03. That was 2 years ago. And this was before the ETF. This was before all the stuff that you've been hearing about why Ethereum should be skyrocketing. And all I was doing was looking at the charts
Mm.
and knowing that, okay, Bitcoin tends to rise first out of a bear market, everything else follows. So Bitcoin drains liquidity out of everything else. And so therefore, if Bitcoin's going to be going on a new run from what it was 15, 20K up to 100K plus, well, then Ethereum Bitcoin's going to suffer, not because Ethereum sucks, but just because Bitcoin takes liquidity of everything as it rises and then everything follows. And so it's a very logical approach. And with that knowledge, I said, okay, send Ethereum Bitcoin down 50 plus percent. Today we sit 53% lower than that, and we're almost at the target. But the point is that when we get to the area of interest at the downside, the same idea works in reverse, right? So like as bearish as I was on Ethereum Bitcoin for the last 2 years, I'll become insanely bullish on it soon. And
Right.
what I expect is we bottom out, somewhere here, depending on, again, how aggressive Bitcoin momentum is. And what follows is essentially a run the new all-time highs. And so this is a period of outperformance against Bitcoin on Ethereum to the tune of some 400%, right? So like it's simply looking at the charts and understanding the market dynamics, and you will find the greatest opportunities if you know how to do that. And I think Ethereum will be one of them once Bitcoin tops. I think Ethereum will follow with a vengeance. And again, looking for to the tune of 400% of outperformance in a short window of time. So Ethereum's time will come, regardless of the fundamentals. Ethereum is the number two coin in the space. Doesn't matter what you or I or anyone else says. The market values it as the number two coin in the space, and so it will have its time, just like most other alts will. But we do need to be a little bit patient. We have a little bit more bleeding to go. Again, as Bitcoin blows up in this parabolic advance and accelerates out of the 6 month long consolidation, most alts will suffer, including Ethereum. But ultimately, when the time comes, they will have their chance to shine.
I tried to tell people about this, man, like understand the cycles, but they get so caught up in their token narratives and all types of stories, right? But it's like just understand the flow of the liquidity. But hopefully this is another video that hammers home the point of understanding these cycles and forgetting the narratives.
Yeah, 100%. It's hard to believe. It's like, how do I say it? Like, I mean, 7 years ago, I wouldn't have thought that the charts are this important, or that, to have this much focus on them. And I too used to look at the news and look at these things. But when you really see it working, when you use this stuff and you see it working again and again and again and again, it becomes a lot easier to ignore the narratives. And so I think for people that struggle with this idea, I think the majority of them probably aren't very familiar with technical analysis, or maybe have tried it and haven't found success with it. based on whatever method they're using. And there's a lot of stuff out there that doesn't work. So I understand that. But the better that you understand the charts and the technicals, and the more that you see them working and making sense, the more you find it easier to kind of ignore the noise out there. And so for those that are struggling with it, I recommend educating yourself. Knowledge is power, as they say. It's very, very true. The more that you know and understand, the markets and how to interpret the charts, the more that you will be able to navigate these markets.
Absolutely. And there's a saying out there. I don't know if you've heard it. I heard some old chart guys talk about it. Show me the charts and I'll tell you the news.
Yes, yeah, I love that. I love that saying. That's like I'm gonna frame that and throw it on my wall because that is like one of the number one sayings that I will repeat. Consolidation precedes expansion, and show me the charts and I'll tell you the news. Those are like the two things that you should take away from any of my content is like focus on those 2 points and you should do very well.
Absolutely. All right, let's talk Solana. Solana's been doing pretty well. It broke out, kind of retrace, I guess, a bit, if you want to call it that. What are you expecting as far as the top?
Yeah, so Solana's an interesting one. So yeah, I've been pretty vocally, like relatively bearish on it, and I'll explain the rationale for that here in a second. But a lot of people don't know that I actually bought Solana down here under $3. I bought
Wow.
under $3 and I sold some at $80 and I sold some at over 100. So I made my
Nice.
50 to whatever X on Solana. Again, I've been in these markets for a while, so a lot of people see me being relatively bearish here, and they're like, "Oh, you just missed out. Like you're a perma bear on Solana. You hate Solana. I don't hate Solana. I'm not a perma bear. I was very bullish on it down here at the lows, and I'm a little bit bearish here at this what I believe to be a relatively local top. But I'm not saying that the top is in for the rest of the cycle. What I am saying is that I think that it's due for a cool down. And if
Mhm.
I can show you one chart that kind of explains why, it'll be the Solana Bitcoin chart here. And this is kind of what's kept me grounded in my relatively bearish bias on it because what I see here is pretty straightforward and simple, and it's hard to ignore. So I'll go here once again to the higher time frames. And again, anytime you're struggling with identifying a bias on any of these charts, you want to go to the highest of time frames. The higher the time frame that you go to, the more clear things will usually get. So here's the 2 month chart, and you can see here again the same way that we identified that support zone on Ethereum. Right here, we have 2 months of consolidation at the highest before a breakdown, right?
Mhm.
And I'm going to change this to red. This region is essentially massive resistance against Bitcoin, meaning when this chart gets to this area here, we expect a rejection. And again, this is a chart against Bitcoin. All this means is that Solana outperformance against Bitcoin for now is relatively capped.
Mhm.
Okay. And if I go down here to the lower time frames, what you can see here on the lower time frames is that we have once again this series of marginal higher highs or higher lows, sorry.
Mhm.
And we have wicks or we have liquidity being taken at the highs. So when we break above these highs, we see a little bit of a sell off. And we're now seeing this built up, what I like to call liquidity to the downside. And what else do we have? Well, if I go here to the 3 weekly, you can see here that we have a little gap here, or what we like to call an inefficiency. You can call it a bunch of different names, but essentially an area of price action in which price moved very aggressively without any sort of significant retests. These areas are often revisited. So you put all this you put all this together, and what you have here is you have a very significant area of resistance above us, kind of some free empty air below us with a bunch of untapped lows, which is a draw on price. And what that tells me is that even if Solana Bitcoin climbs here and sees some relative outperformance, it's going to end up where? In this massive resistance.
Mhm.
And with all these built up lows here, if we fail to breach this massive resistance, which is often likely on the first test,
Mhm.
then we come back down and we break all of these lows, which means we dive down here. Where is the most likely place for us to catch a bid? In the blue zone here. And then maybe we reverse to the upside.
Mhm.
But in that time, what you have here, even from current levels, is a significant drawdown against Bitcoin, is a 45% drawdown against Bitcoin. So in my eyes, if we manage to get to the red zone, that makes for a great place for me to either short or take profits on Solana because more likely than not, we're going to reject. And if we reject, we're looking at a 50 to 60% move to the downside against Bitcoin. So Solana is in a range here, what I believe to be like a local distribution range, because we've had a massive run up and We're running up into resistance. And so for me, there's just better picks out there than Solana right now. Again, I'm not saying you should short it here because I think there's a decent chance we make a final shove up to these highs. But if we get that, that's where I'd be looking to take profits or head short or, short outright short for what I believe will be a larger correction forming here. Anytime you get these built up lows and you get liquidity being taken above, it's usually distribution. And the opposite works as well. If you're getting lower highs with liquidity being taken at the lows, it's usually accumulation. So knowing that, now there's fundamental reasons that I've seen on Twitter murmurings of some massive inflation on Solana that people aren't aware of, or some massive token unlocks, and all that is there. But again, for me, I'm just a chart guy, so I'm focusing on this right here. And what it tells me is, Solana had a massive run up. It's fantastic, but every coin that has a massive run up needs to cool off. It needs to digest that move before the next massive run up. So people are looking at Solana and thinking it's going to go to $1,000 tomorrow. And my response is, yeah, maybe it goes to $1,000, but more likely than not, we see a few months of consolidation and chop before that ever happens. And so if you're looking at what to buy right now, yeah, you can buy Solana after a 15x to the upside, or you can buy a coin that's down here before the 15x to the upside and catch that massive move. So when I look at all these things, specifically the Solana Bitcoin pairing, it doesn't make me too excited about Solana at these levels. Like even if we get to 1000x, that's like a 8x. Coins that are down at these lows here, just to get here, that's a 15x. And then if they go, an equivalent amount, you're looking at a 15x plus an 8x, you're looking at a 100x plus, right? So like risk to reward at these levels for Solana isn't quite there in my opinion. Maybe it will be one day. In fact, I can mark off this zone just looking at this chart as like a fantastic buy opportunity if we get there. Now, a lot of people, they'll say this is unrealistic, but hey, in this market, 50, 60, 70% corrections are to be expected, especially after a massive run up like this. So, hey, if we get, I don't know if we're going to get $30 to $50 Solana, but don't forget a year ago we were trading at $12, right? So how unrealistic is it? You tell me. But yeah, if we can get here, fantastic buy in my opinion. Until then, I'd like to see more PA develop because I don't think this thing is going to be taking off, anytime soon.
And that aligns with what you've been talking about, where the Bitcoin dominance continues to rise. Bitcoin steals the show right now. And then eventually some of the liquidity will start to flow back down to Solana, Ethereum, and so forth. So let's say it breaks down, right? Like we were talking about, show me the charts and I'll tell you the news. Maybe there's some bad news. The token supply, all these things are coming. It breaks down a bit. It finds a bit of a bottom. What do you think it moves up to, like $1,000, as some people have been saying?
Yeah, so I think that's possible. In fact, you know what? Looking at this chart, something came to mind, which I'll show you here in a second. But yeah, I think that's possible that it does something like that, goes to $1,000. Not out of the question, not unreasonable. It totally depends on how long this correction takes and where we go from here. So I just realized looking at this chart that looks very similar to another chart in here that I've been following quite closely, and I'll show you that in a second here. But it kind of argues the point that we really need to be patient on Solana here because it's had a mega run, but with everything the way everything's looking on Solana here on the Bitcoin pairing, it could really cool off. And I'm looking at this as a giant range, and realistically, like the most optimal place to buy in a range like this is a retest of the range lows. And that seems absolutely bonkers to probably a lot of people that we could do something like this after getting such a rally. But I just want to quickly pivot to Link because this is one that I've been following and it's doing the exact same thing right now. And back when Link was trading here at close to $20, I shorted it. I placed $1 million short on the thing. I posted it on Twitter. People came at me going crazy. Why would you short Link? It's going to new all-time highs. We've had a massive run. I said, I'm looking at a short down to $8. They said, you're crazy. They said, you've lost your mind. I said, I'm just trading the charts. And we hit $8 not too long ago. But that was a 60% drop to the downside on a coin that had pretty much gone straight up from $5 to $22 in a number of weeks. And I said, this looks like a range to me. I think we're going to get a pullback to the range lows. This is where it makes sense to be a buyer. After we drop down to here, I think we then go for the highs. Very simple, straightforward, but to most, this seemed ridiculous at the time. And if you look at this chart and now you look at Solana, you can actually see they look quite similar from the high time frames.
Yes.
So what if this happens, right? You have to be prepared for all outcomes in this space. And for
Right.
those that are jumping into Solana after a 15x off the lows, what if this happens? Are you ready for a drawdown to 18 to $35? Remember, a year ago we were at 12. So this is still a good, it is reasonable and it's not crazy. But if you're buying here at $146, all of a sudden this is like game over to you, right?
Mm.
So you keep this in mind, and the idea is you want to buy these coins when risk reward is at the best possible levels. At the highs, at the range highs, after what I just showed you guys, the risk reward is not fantastic here. You know where it is fantastic? Down here at the range lows. And if you're patient and if you're, in this space, there's thousands of coins. So there's no need to jump into a chart that has this as a possibility
Right.
when there's another 500 coins that probably look better, right? So this is where I'd be interested in Solana, looking at this again, and again, market dynamics and as things develop will change. With Bitcoin going parabolic, it can affect a lot of other coins in different ways. And so maybe the drawdown that we saw in Link was potentially a symptom of Bitcoin not having gone parabolic yet. And maybe when Bitcoin goes parabolic, a drawdown of this magnitude may not be as realistic. Maybe we just come down to that previous level that I showed and then go up. Who knows? The
Right.
point being, just be patient here, wait for price action to develop, and we could get a much better price on Solana down the road. And after that, sure, certainly it's possible that we go to $1,000. I don't think that's unreasonable by any means.
Mm.
But I'm not necessarily betting on it from current levels right now. I want to see price action develop. If we get an entry, lower down, we can then evaluate as things develop and see if it makes sense to head to, 1,000 plus.
Got it. Since you brought up Link, what are you thinking for Link this cycle?
Right. So Link is again one that I bought as well.
Yeah.
I think I bought it at, let me see here. I want to say like $3. And then I took profits on it a while back. I bought it here in this consolidation.
Mm.
I didn't hold it to $50, unfortunately. I think I sold that around 26. So Link is one that I've held before and that I like. Again, Link was the future of France when it was going up, and now everyone hates it because it's been going down. But to me, this is actually one of the cleanest charts that's in this space right now, because what you have here is essentially a massive consolidation or accumulation down here at the lows. And this accumulation lasted from May of 2022 to October of 2023. So over a year long of accumulation. And you're now basically retesting that. So if we make a higher low here, it sets up very beautifully for a move to the highs again. And from the lows here at $8 to the highs here at 53, that's a 7x at the minimum. And then once we're in price discovery, I mean, at that point, all bets are off, and it depends on how high momentum carries us. But from 56 in price discovery, again, I don't know how high we'll go, but over 100 easy. And then if you take that from 8 to 100, you're looking at all of a sudden, you're looking at a 10 to 15x. And so even just to give you a beautiful example, compare this to Solana where people are calling for $1,000.
Mm.
Okay, if we go to $1,000, you're looking at, if we go to $1,000, if we make it there from current levels, you're looking at an 8x.
Right.
I'm telling you that on Link, at the bare minimum, you'll get an 8x, the bare minimum, just to get the prior all-time highs. And then depending on how high we go, that 8x could become a 10x, a 15x, a 20x, who knows, right? So
Mm.
again, risk to reward is important in the space. And Link is setting up beautifully to where it makes sense to be a buyer. And I am interested in establishing a position here close to $8 if I can. If the stars line up and I have free capital at the time, then I'll do that. And I plan on holding that if I get that position, it's a new all-time highs.
Well, Cred, I'm with you there because I bought some again at $7, $8 in those lows because I made a nice, it was my biggest return in 2020 because I bought it early and then it did an incredible run up, right? So I started selling at like 40, $50 as well. So I'm hoping it does the same for me again this cycle.
Yeah, I think you have a fantastic entry that a lot of people will be envious of in a few months.
Okay, final token here, and this one is controversial, of course. Very, you have a lot of people love XRP, a lot of people hate it. Let's talk about XRP.
All right, let's jump into XRP. Yeah, this is probably the most controversial coin in this space. Whenever I talk about it, I either get a lot of love or a lot of hate or a
Yeah.
combination of both. So this will be interesting. But again, XRP, it is one of my long-term spot holds. So I hold this thing in my spot portfolio. I have for years. And with XRP, I think what you need to kind of the big picture takeaway here is, again, we talk about the longer the consolidation, the greater the expansion. There is no coin in this space that has consolidated as long as XRP has at this point. We've been consolidating literally since 2017. Again, partly, I believe, because of the SEC lawsuit that kind of came out of the blue. I believe when it came out, we were trading at, if I'm not mistaken, at these local highs. And so it kind of came out, knocked XRP down, and we failed to recover since then. But at the end of the day, what you have here, again, consolidation is not weakness. So what you have here is 7 years of sideways price action, 7 years of price making lower highs and higher lows into a very familiar consolidation pattern. And again, in the context of where the market is, with Bitcoin about to go parabolic, with the rest of the market about to rise, with the biggest market rise we've seen since 2017, I think it is, and again, with context with the lawsuit being essentially finished now, Ripple having won, I think it makes zero sense to bet on this breaking down. I just don't see how that makes any logical sense whatsoever. More likely than not, we break out of here. When we do break out of here after a 7-year long consolidation, again, the longer the consolidation, the greater the expansion. So the expansion should be absolutely massive. Of course, new all-time highs at 335 is really the bare minimum. Above that, as I previously said in this video, I said we could see it. I think we could very reasonably see a minimum of $5,000 to $7,000 Ethereum, more likely a minimum $10,000, somewhere between $10,000 to $20,000. I've been very vocal about a double-digit XRP, and I'm not talking about like $95 or anything like that. I'm talking about a minimum of $10.
Right.
And realistically, I think we could easily push up between $20 to $30. And when I say that, initially people again are obviously skeptical. I get met with, you're crazy, you're irrational, you're illogical. And then I'm like, do you believe in a $10,000 Ethereum? And the answer is usually yes. And then I'm like, all right, well, let's take a look at the market cap of Ethereum, which I'll pull up right now.
And Cred, I know some of the skeptics will say, hey, but look at the token supply, right? It's very different. Does that matter?
Yeah, so token supply doesn't matter. It matters if inflation is uncapped. It matters if inflation is unlimited. At that point, it matters. But as long as supply is capped, regardless if it's 1 million coins or 1 billion coins, it doesn't matter. And that's because price will adjust based on that supply, right? So, for example, the reason that Ethereum is $2,500 and XRP is 20 cents, despite having market caps that are not different by 100 times, is because the supply of Ethereum is a lot less. And so the value per token is a lot higher. But at the end of the day, the market cap is what you should be focusing on rather than supply. And so Ethereum sits here at a market cap of 300 million, while XRP sits at a market cap of 32 million. There's a 10x difference in market cap, but there's an over like hundreds of difference in token price because the supply is so different. But what you should be focusing on is a market cap. And what you take away from here is that Ethereum market cap is 10 times that of XRP today, and that's what matters. Now, a $10,000 Ethereum gives us a market cap of 1.2 billion. A $1.2 billion market cap on XRP, I don't know, doing some quick math, what does that give us? 1.2 billion, I don't have a calculator on me, divided by 30 million. I think that's about a 400x, if I'm not mistaken. So a 400x on 60 cents is $24. So if you think that Ethereum can hit $10,000, then you should agree that XRP can realistically hit above $20. And the thing to remember is that XRP flipped Ethereum in the last cycle for a small period of time.
Right.
And so if XRP breaks out from this 7-year long consolidation and goes on a run, $10, if we think Ethereum can hit a market cap of 1.2, what was that? Did I say billion? 1.2 trillion, I meant, sorry. 1.2 trillion. And if XRP can hit 1.2 trillion, that puts us at 24. That means that if XRP can even hit $500 billion, that puts us at $10.
Right.
So if you think this is irrational or ridiculous, then you're irrational and ridiculous if you think Ethereum can hit $10,000, right? Like it's pretty simple logic, but it escapes a lot of people. So yeah, if XRP breaks out, easily new highs, easily, in my opinion, double digits. And let's see if we can get to 20 or $30. That's kind of where I think is a sweet spot and where I love to take a lot of profits.
That will be amazing, Cred, because I got some XRP bags going back since 2017. So,
Love
uh,
it.
man, amazing analysis, dude. And this is why I'm a big fan of yours. Really great stuff. Where can people follow you?
People can follow me on X at Credible Crypto. They can follow me on YouTube at Credible Crypto as well, and they can follow me on TikTok at Credible Crypto. TikTok, I just started, so there's not much on it yet, but yeah, definitely give the YouTube and Twitter a follow. I post all my long form videos and long form content on YouTube. And so if you really want to get a better idea, if you enjoyed this video and the way that I analyze the charts, you really want to tune into my YouTube channel. If you want smaller, briefer updates, definitely check out my Twitter.
Awesome. I'll link to everything. Everyone, check out the description. Go follow Cred on YouTube and Twitter, X, and even TikTok as well. Cred, great stuff, man. Thank you so much.
Thank you, Tony.